What's up, everybody? Nate here. So the vast majority of Americans have had a revelation over the last 2 years or so. And no, I'm not talking about investing or the pandemic or the Great Resignation here. I'm talking about how the vast majority of Americans went from not knowing what the Federal Reserve was to now hearing about the Federal Reserve almost every single week. In the beginning of the pandemic, all the way back in March of 2020, the Fed was in the news a lot, and that was because they were constantly stimulating the economy, printing trillions of dollars for the everyday average American and for the stock market. Now, the Federal Reserve is still in the news, except for today it's all about because they might crash the United States economy and send us into a recession. The Fed is taking moves right now to try and lower inflation and get our economy back on track in general. And while they have come out and said that pretty much everything they're going to do is leading our economy into a soft landing, meaning we're not really going to have a recession, things are a lot more complicated than that. So today, I want to talk all about the Federal Reserve and their plan for inflation and our economy in 2022. We're going to go over how they plan to keep us out of a recession and why exactly they've been saying that over the last few months. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now the Federal Reserve has pretty much a two-step plan. One is looking all at their balance sheet and reducing it, more importantly, and two is all about lowering demand and raising interest rates in our economy. So let's first talk about interest rates. I mentioned before, but the Federal Reserve, all the way back in March of 2020, lowered their benchmark interest rates down to 0%. This meant that it was a historically great time for many Americans to go out and get an auto loan or a mortgage. It was super easy to borrow money because interest rates were so low and you were going to save a ton of money on your monthly payments. Now, the reason they did that was to stimulate our economy. The Fed needed the United States consumer to continue to spend money. That is how our economy grows. Around 70% or so of our economic GDP, or our gross domestic product, is produced because of consumer spending. If consumers stop spending like they thought they were going to because of the pandemic, well, our economy is immediately sent into a recession. Now, we did see a recession back in 2020, but it was a very short one because of low interest rates and economic stimulus. But this kind of caused a pretty crazy phenomenon in the United States, and you have for sure seen it over the last 2 years. When demand like that was all of a sudden heightened artificially, well, now millions of Americans are buying probably more than they should, at least in a reasonable capacity all at once. Millions of Americans went out and bought houses. That sent the housing market in terms of prices through the roof and inventory through the floor. And on top of that, we had stimulus checks coming out from the United States government and Fed as well. So now you had trillions of additional dollars circulating throughout our economy. In fact, over the last 2 years, around 80% of all of the money that is currently in circulation was printed. That is a lot of money all at once, and what it did was cause inflation to rise. Basically, when you have demand for everything in our economy going way up, well, the United States Federal Reserve needs to print a lot more money. It's important to note here that the Fed prints money every single year. This is why inflation goes up by around 1 to 3%. We are used to seeing that. However, now they've printed so much money that inflation is going up at historical levels too. The US government prints a lot of money because we constantly need more of it. People get raises, people need to make more, and businesses need to produce more in order to meet all of the needs of our economy. This means that the US is always going to be printing money. However, it also means that prices go up every single year. The average cost of everything usually rises by around 1 to 3%. So it's not a huge amount, but if something costs $1 today, a year from now, it might cost $1.02 or $1.03. Not a big deal, but if you add that up over a series of 10, 20, and 30 years, well, now you're paying additional dollars for something that used to cost $1 alone. Like I said though, this has been on steroids in 2020 and in 2021, and now it's affecting our economy in 2022. Americans have to pay so much more for everything because demand was super high, and now businesses are struggling to keep up. They have to produce more, so they have to hire more people and they have to get a lot more materials. That is causing a pretty serious problem too. But what exactly is the Fed doing in 2022 to try to prevent this and lower inflation? Well, now they are raising their benchmark interest rates. It was announced back in March of this year that they were going to immediately raise their benchmark interest rates by 0.25%. And in May, they raised them again by a half a percentage point. That is some of the biggest rate hikes that we've seen in over 20 years. And that's because inflation is higher than we've seen in over 20 years. Now we are starting to see the inverse happen in our economy. I remember when I bought my first house back in 2020, the interest rates were super low. I knew people that were getting in on an interest rate of around 2 to 3%. That is historically low, and you're probably never going to see that again in your lifetime. Now though, in 2022, it's not uncommon for somebody to get a 5 to 6% interest rate. This simply means that you are going to be paying hundreds of additional dollars every single month for your mortgage, and the house didn't really change. Simply because interest rates are going up. Now that pushes a lot of buyers out of the market, and that's kind of the point. With so many people not able to buy a house or a car or get loans in general, now you have millions of Americans who can't spend their money and demand is coming down. Less money in circulation means people can't spend as much, so prices eventually stabilize. So that is the first thing the Federal Reserve is working on in 2022. The second all comes from their balance sheet. I talked a lot about their stimulus that they printed in 2020 and in 2021, and this racked up trillions of dollars for the Federal Reserve. In fact, the Federal Reserve alone racked up a balance sheet of around $9 trillion just in its quantitative easing program on Wall Street. They went into the market and started to buy hundreds of billions of dollars every single month in corporate bonds and mortgage-backed securities and also treasury notes. This meant that they were giving hundreds of billions of dollars worth of liquidity to the market. So there is so much more money going in. Investors have so much more money to spend. They can invest in risky assets. They can invest and grow their wealth. And a lot of Americans and corporations did just that. We saw asset prices in 2021 reach new record highs. A lot of that had to do with inflation and money printing, and a lot of investors trying to escape the cost of everything going up by investing in something so they could have their money make more money than what inflation is. But the other half of that equation is because of quantitative easing. In 2020, the Federal Reserve bailed out the stock market because they immediately pumped so much money in that the stock market had no other choice but to go up. It crashed back in March of 2020 because businesses were beginning to fail, people were out of work, and a recession was coming. Plus, nobody really knew how long the pandemic was going to last for, so that caused a lot of fear. In case you haven't noticed though, the stock market in 2022 has done nothing but tank and is now down majorly from its record highs that were set back in 2021. Now that's twofold because the Federal Reserve is now pulling all of that stimulus from Wall Street. They're allowing those billions and trillions of dollars that they've bought in corporate bonds and treasury notes and mortgage-backed securities to essentially roll off, and they're not reinvesting their money. So there's less liquidity for the stock market, meaning businesses are getting a whole lot riskier. Back in 2020 and in 2021, they were betting with Uncle Sam's money. Now they're betting with their own. So they're not going to pour billions of dollars into an unproven tech giant, which is part of the reason why tech in general, which a lot of people considered a bubble in 2021, is now starting to pop. All of these investors want a stable investment again, and they can't put their money behind something that is unproven and eventually lose it all. Of course, the other side of the equation is interest rates, because investors don't know if the interest rate policies by the Federal Reserve are going to be enough to bring inflation down fast enough and solve a lot of our economic issues. And of course, there's the other side that some investors believe that the Fed is getting too aggressive with inflation, and that will eliminate way too much demand too quickly and cause a recession throughout the country. So that is essentially the Federal Reserve's plan. It's the Fed's plan to keep an eye on inflation and start to bring it down. They don't want inflation to go away completely because the Federal Reserve needs inflation in order to survive, and also our country needs a little bit of inflation too in order to grow. The Federal Reserve works directly with the United States federal government, and the federal government, in case you didn't notice, has trillions of dollars worth of debt. The United States government gets its money from the Federal Reserve. So the more money that is printed, well, the value of every single dollar starts to go down, which means if you have a loan or any type of debt, then that debt is all of a sudden becoming cheaper because it's set, especially if you don't have a really high interest rate. If your interest rate is fixed, like a lot of people get on a house, then your debt is essentially getting a lot cheaper. So the original amount that you took out is not that big anymore. The federal government needs this. They need inflation to continue to rise because they have a lot of debt and they need to be able to figure out ways to pay it off very cheaply. That's where the Fed comes in, and the Fed continues to print money. But also, like I said before, our economy needs to grow. You do need more money as more businesses open, as there's a bigger demand for goods and services in our economy. You can't just have the same amount of money because everything is going to go up as businesses make more, as supply chain issues throughout the world cause problems and make things cost more here at home. But they want to bring inflation down, and the Federal Reserve believes that they can do this without causing an outright recession. Some Fed presidents believe that there could be a small chance of a recession in 2022 or in 2023, but a lot of them say that this recession is going to be mild. Mild meaning it won't be very deep. The issues that would cause a recession are not that widespread, and they're not systematic failures of our economy. This would mean that the United States would essentially have a soft landing. They wouldn't go into a recession. They would be able to lower interest rates, and demand and supply would basically reach an equilibrium all throughout the United States. Now, why exactly is the Federal Reserve saying this? Well, they are looking at rate hikes of the past and what they have done in the past in order to lower inflation and get our economy back on track. More specifically, the Federal Reserve of today is looking back on what happened back in 1994. Our economy was kind of suffering a similar thing. We had growing inflation, and the Federal Reserve needed to start raising interest rates in order to lower demand. Federal Reserve Chairman at the time, Alan Greenspan, actually raised interest rates 7 whole times back in 1994, including half a percentage point hike and a 3/4 percentage point hike as well. That was the last time that the Federal Reserve was this aggressive with inflation and its economic policies, and they're looking at that right now because they are looking to do the same exact thing in 2022, raise rates aggressively and get inflation under control. But what they're not considering is that 1994 and the last soft landing we had for our economy was a very different situation. The most obvious difference between what happened over the last few years and 1994 was the Federal Reserve of the 90s was very proactive on inflation. Alan Greenspan actually started to raise interest rates a lot faster and way before we started to have problems in our economy. That was a proactive approach, but Federal Reserve Chairman Jerome Powell is just now starting to raise interest rates after seeing inflation hit over 40-year highs. This means that while most economists believe that the Federal Reserve needs to raise interest rates, it might be too late in order to prevent a soft landing. They needed to raise interest rates a long time ago, so right now they are way behind the curve. Interest rates should be way higher. And the United States economy should already be getting used to raising interest rates. We should already be past the stock market tank and past markets starting to go down, but we are not. We are right in the midst of it in 2022. The other big thing to mention is there wasn't as many geopolitical concerns as there is today. I mean, back in 1994, sure, there is obviously some things going on in the world, but for the most part, the United States didn't really have a lot of outside factors and outside problems that would cause a recession and continue to cause inflation to go up. In 2022, we absolutely do. We have the war between Russia and Ukraine. This has meant that energy prices have spiked all throughout the United States, and it's really hard to get a lot of other raw materials to produce goods here at home. And we have China continuing to go in economic lockdowns because of the pandemic. A lot of our major businesses get some of their goods and services from China, and they just can't produce them at this point. We don't know how long those are going to go on for, and the Federal Reserve has no control over that. Even if they raise interest rates, well, we still might have high inflation because businesses simply can't produce goods. That means you're always going to have a shortage, and as long as you have a shortage and supply outpaces demand, then you're going to have an inflation problem. And then finally, the baby boomer generation of this time was actually pretty prominent in the late 80s and early 90s. They were just starting some of their best years in order to buy houses and get loans and make the most money that they possibly could. That meant that there was brand new technology. We had a booming economy economy. So there was so much happening in 1994 for that generation. And the baby boomers ended up becoming one of the wealthiest generations in American history. That helped them raise interest rates because there was already so much money going around. In 2022, it's a lot different. That money from the baby boomer generation is starting to trickle down. However, it's nowhere near where it should be just yet. And we have things like the Great Resignation causing a lot of millennials to make a lot more money, but not work in general for a long period of time. Your labor market is a lot different. And the Federal Reserve right now, because inflation is so high and businesses are paying people so much, they're actually recommending that businesses go on a hiring freeze in 2022, causing unemployment to rise and businesses to make a lot less. And typically when unemployment goes up too quickly, then you automatically have a recession because Americans simply can't buy anything. Right now we have the millennials and even Gen Z starting to reach their best economic years. So I'm not sure that that will be the biggest problem that we're facing, but supply chain issues because of geopolitical concerns is something that the Fed cannot solve. And it's going to continue to mean that inflation goes up in the United States. Not only that, but the Federal Reserve is way behind on inflation. Most experts and investors agree on this. So that leads the question, are we going to see a recession in 2022? Well, like all things, it is definitely possible that we could see a recession in 2022. If we were to see a recession, I think it would be a very short one because consumer sentiment is still pretty good all throughout the United States. Americans still want to spend, whether it's on credit or debit, and we're starting to see some wealth grow for the millennials and Gen X and Gen Z. Inflation, though, is probably still going to go up because you have those supply chain problems that can't really be fixed. That means you're going to have shortages and businesses are getting killed right now in their earnings reports. Walmart and Target and your tech giants have recently reported majorly bad earnings reports on Wall Street for Q1 of 2022. Consumers are not buying as much, and they have to have additional costs because of supply chain concerns. What that could lead to is a hiring freeze from a lot of these businesses and unemployment because now they're not making enough money in order to survive, so they have to start cutting people. With people having a lot less money to spend because they're unemployed, well, then the Federal Reserve may have to backtrack on a lot of its policies in order to spark that demand again. Of course, though, on the flip side, and to be completely positive, if we start to see global economic issues end and supply chain issues end too, then inflation can start coming down, people can start buying more because wages are going up, and our economy can probably reach a soft landing in 2022. This is going to be very difficult though. So in my opinion, I think we're going to see a recession in 2022 or in 2023. I don't think it's going to last very long, and I don't think it's going to feel like a regular recession because there is a lot of wealth and economic growth in our economy right now. But it will technically be a recession, and recessions can lead to a lot of other things which could cause a snowball effect. Something that the Federal Reserve is going to have to be proactive on instead of reactive this time. But now I want to hear from you on this issue. What do you think about the Federal Reserve and their plan to fight inflation and grow our economy in 2022? Do you think they're right that eventually we're going to lead into a soft landing, or is a recession definitely going to happen in the United States this year or in 2023? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.